Hey traders, checking in on the stock market today. So bears with no follow through today. That's certainly been a theme for 2020. Today's video is going to have a whole bunch of trade review, about 13 minutes on the second half of this video. Let's get right into it.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So the S&P 500 bears with no follow through overnight. Last night we were looking for the 4-hour higher low to form. We certainly got it, and now we are testing resistance, the high of yesterday. It's possible we reject from that level. If we do, we're going to look for a higher low and a continued equilibrium. If that level breaks, it's just the all-time high is the only resistance level. And again, just very notable that zero bear follow-through. And actually, one other thing to note about it is it was a bear flag on the hourly, and it technically confirmed with zero follow-through. Again, how many times in these videos have we seen nat gas do that? So a bear break, zero follow-through, and that was it. Bulls full control for the most part from there, and here we are testing that resistance. And on SPY, that resistance aligns with 369.80, the high of yesterday. So yesterday was a lot of profit taking on that news and gap up open, zero bear follow through. And here we are knocking on the door of the all-time high, 371.05 yet again. 0.5% from where we stand. Strong close at the end of the day. And we have a new line in the sand level. It was the line in the sand level from yesterday, 363.26. Bears did not break it. Bulls keep complete control. IWM, new all-time high. Bulls keep complete control. And that is the theme of this video. And again, I can't highlight enough the importance of bears needing to see increased volume and our three major sectors showing weakness at the same time. I know I'm a broken record at this point, but keeping that locked into your brain, you cannot see pullbacks like this and like this without that happening. So you can pull back and set little daily higher lows without that happening, absolutely. But if you're looking bearish on those little daily higher lows, the risk to reward is not in your favor. You want this kind of move. And again, it cannot happen without our major sectors all hitting lows at the same time and seeing that high bear volume. So just make it a mental note that that has to happen for bears to see any follow through. We cannot have confidence in bears if that does not happen. And it didn't happen yesterday. And over the last 2 days, we're seeing the inverse action. QQQ strong, XLF at the low of the day. QQQ consolidates, XLF bounces off the low of the day. And that rotation keeps the broader market strong. QQQ up at the high. All-time high is in play, 308.60. We would have to fail to break 308.60, break the low of today. If we do, we're going to be watching for a tightening daily range to form. And if we break resistance, obviously, bulls in complete control and a new all-time high. And again, the impressive thing about what the QQQ bulls have been doing, two of the major holdings, aside from Apple, Apple's been all bulls, but Amazon and Microsoft, major holdings in QQQ. And they have done nothing over the last month, sideways. And you can look at that two ways. You could say, well, if the Microsoft and Amazon bulls break bullish, then that's just extra juice for another leg up in this market and in the tech sector. And you could also look at this and say, QQQ bulls are not going to get any follow through in the new all-time highs if Amazon and Microsoft cannot break these sideways ranges bullish. So we're watching very close. Volatility will return to Amazon and Microsoft sometime in the next few weeks. Keeping in mind we got holiday week next week and a holiday week the following week. So it might be first thing in the new year, but pay attention to those sideways 4 or 5 week ranges that are due for a break soon. Healthcare, daily chart, inside bar. So if this inside bar breaks bullish, we'll be looking at a new daily higher low of 110.77, and we'll be looking right back up at that all-time high. In the financial sector, after being the lead bear yesterday, starting weekly consolidation, inside bar today as well. And could this be a weekly bull flag? Absolutely, that's a possibility. Bears have to prove to us that it is not a weekly bull flag, and to do so, they would need to drop down towards that weekly EMA 12, which is a long ways away. So it's possible these inside bars for both XLF and XLV break bearish, but we closed up at the high of the day. Biotech sector. A lot of profit taking yesterday. A little bit of bulls buying that dip today. Trying to set a daily high or low. Anything above 135.28. Hourly trend is going to be our guide. It is an hourly downtrend. High of yesterday. Hourly high or low. Failed to break the high of yesterday. Lower low. So there's your hourly downtrend. And on this current bounce into the end of the day, anything under 148.77 is just an hourly lower high. So the bulls have to shape up an hourly trend change in their favor for our daily high or low to be set. SMH, same thing as the tech sector, still marching our way back up towards that all-time high. We would have to fail to break 221.79 and lose the pattern of a higher low each day if we're going to look for a tightening range or the possibility of a confirmed downtrend. But you're not going to confirm those downtrends on QQQ and SMH without number one, a rejection from resistance, and number two, increasing bear volume. If you don't have increasing bear volume, you're going to look for an equilibrium. TAN, there you go. So, bear break, lack of follow through, means zoom out, potential weekly bull flag, and there's your weekly bull flag confirmed. Big bull volume, Biden's in, and solar likes it. Lack of resistance. So again, we got to look all the way back here. Next resistance level, 93.40, and then 114.74. Look at the lack of resistance after 116.70. From 116.70, we're looking at 138 and 150. So let's condense this. Don't know how much we need to condense it. Monthly, it is just a rocket ship straight move up. Definitely cautious of the monthly chart, but as long as we keep this weekly uptrend, bulls keep complete control. 116.70 is the next most important resistance level for me. Congrats to the bulls. Volume to prove it. Strong close at the high of the day. Tons of space for a daily high or low to form. Again, it's all about, in this market environment in 2021, bear breaks with no follow through to indicate bull moves, and bull breaks with no follow through to indicate bear moves. Confirmed daily downtrend, straight into 4 green days in a row. The VIX, daily inside bar as well. Certainly losing a bit of momentum, but we would have to lose 22 here if we were going to see significant drop back towards that base of 20. The dollar is still remaining weak. We know we have to break 91.24 for the bulls to prove anything to us, and we're not close to doing so. We are down at the low. That's keeping our assets strong. It's keeping the market strong. It's keeping Bitcoin on the verge of all-time highs, 2% away at the moment. It's keeping the metals attempting to shift their weekly trends. Gold had a big green day today. Impressive day, absolutely. And if gold does break 1875, it's going to start proving stuff to me, proving strength to me. So if I wanted to be a bit cautious as a bull, that's my stop level now. 1819 is now the most important support. If we lose 1819 from here, we're looking right back down at our low. And having that level closer by means my risk is smaller than if I were going off that 1764 level. It's a difference between $90 of risk or $35 of risk. Very big difference. Silver is stronger. Silver never lost the little daily higher lows. And we're looking right back up at that high, 24.22. Silver's key level for me is 23.52. And again, just little higher lows, whereas gold had little lower lows. Miners, solid bull move on the daily. Anything under 36.92 is just a daily lower high. Bulls are going to try and set up a daily trend change to indicate a weekly higher low has been set. And if the bulls are able to break 36.92 from here, you can call that a little weekly trend change, setting our monthly higher low. And again, as long as the dollar stays weak, all of that is on the table. Oil, 4-hour rising wedge. Last candle closed right on it. This candle has 25 minutes to go. If we were to close right here, you know, it's the kind of thing where I just adjust that resistance line up a little bit and it's still the same pattern. I need a convincing break of 47.74 to say that this pattern has seen a bull break out of it. It is a double top at that level at the moment, but even if we reject from here, we just look for a 4-hour high or low. Inventory report tomorrow could either give us a very clear bull break or put us right back in this pattern. But bulls have the edge. Why do they have the edge? Number one, we're at resistance, obviously. Number two, we're still in a daily uptrend. And that's all the reason the bulls need. Natural gas. We lost the 4-hour uptrend today with zero bear follow through. Lower high, lower low. It's not a daily bull flag. Why? Because we didn't break the pattern of a higher low every day. But all you got to do is find a time frame and it is a bull flag. Look at the 12-hour. So little consolidation and trying for continuation. Bottom line is we haven't started daily consolidation. So the patient bulls are still patiently waiting to try and get a higher low compared to 228. But no sign of daily consolidation at the moment just yet. So trade reviews here at the end of the day. I recorded a chunk of this trade reviews in the middle of the day, and then things drastically changed for LAZR into the end of the day. So I attached a clip from the end of the day live stream that I did for members explaining LAZR a little bit more, and that's how we'll end here. Have a good rest of your day. Do good things. See you tomorrow. Hey everyone, so we got a lot of trade reviews today. Today was action-packed. I started the morning with a small loss trying to top fish NIO. So let's look at that NIO on the 5-minute time frame to start the day. We had a big drop and then a big 5-minute oversold bounce. I was top fishing the high of the day by shorting up here. And we started to pull back, and as soon as we failed to break 42, it was a bit of a red flag to me. My initial scale-in entry was 42.30s, stop 42.76, giving some wiggle room over the high of the day. We started pulling back. My trade was starting to be profitable. And as soon as we held 42 support and then headed back up, I exited half of my trade break even, cutting my risk in half. Because if I wanted to see the ideal follow through to show me that I was right, we would have broken 29 there and we would have started that 5-minute equilibrium. So I exited half at break even, cut my risk in half, and then ended up stopping out the second half on that new high of the day. So I started the day with a loser. It was a 40% of a day maker loser, so small level, and that kept me in the zone. If I kept that loss big and if I started the day right out of the gate with a day loser, it would have derailed me a bit, and instead, really the zone just started firing off and setup after setup just started presenting themselves, and I very quickly got into the flow, almost too into the flow, where I was in more trades at once than I am normally comfortable with. So as soon as I stopped out at NIO, that was it, done with it for the day. We did end up having a nice little top fish opportunity, but I was done with NIO at that point. The next trade that I made was PLTR. PLTR, so what was aligning? Multiple time frames, giving us signals. Setup number one, daily equilibrium. We are scouting a daily higher low compared to 25.15. Okay, I've got my clear support. 25.15 is the most important level for me. We then zoom in. 15-minute RSI was in the teens. Great. I love a waterfall dump for a bottom fishing play. I was then watching a 1-minute falling wedge, showing that the bears were running out of some momentum. This was the 1-minute falling wedge. And it was a bit like a channel or falling wedge, whatever you want to call it. I was watching the support line down here. So as soon as we bounced off this level, I entered, got a fill maybe at 25.70 or so. And we then saw a significant bull bounce. So I'm very comfortable on my entry. My game plan was one entry at 25.70, a second entry at 25.30, stop loss under 25 because I wanted to give that wiggle room. So ended up only getting one fill. The bounce started to take place. That's great. From there, we zoom out to the 2-minute time frame and we watch the 2-minute downtrend. Anything under 26.15 is just a lower high. It's an inverse 2-minute head and shoulder setup. Left shoulder, head, and we then look for the 2-minute higher low and higher high. Now here's an example where I was on the verge of a perfect trade and I didn't get it. So I'm in one trade. My break even is 25.70. I then see this 2-minute consolidation and say, okay, I am no longer doing anything except focusing on the low of the day. That's a big enough bounce where if the low of the day breaks from here, it's a big red flag and 25.15 would be likely to break. So we're looking for the 2-minute higher low. I made a second entry on this consolidation a little bit higher than my first entry. I entered it at about 25.85, a little bit too early, about 2 minutes too early, because what that did is then raise my break even to, let's say, 25.77. And so now I have a full position of what I want to have with a break even of 25.77 as we're still pulling back. We had not hit 25.77 yet at that point. And I said to myself, okay, I'm now playing this aggressively by making that second entry. And if the bulls are going to prove themselves to me, they need to form a higher low here quickly to see that continuation. We then pulled back a little bit more than I liked, and I stopped out of half of my position at break even. And again, that just lowers my risk because the size of this 2-minute consolidation was a bit more than I wanted to see. And we ended up confirming the pattern, and it went well. We got nice follow through. The target for the trade was the 15-minute EMA 12, 15-minute oversold bounce. We rejected right from that EMA 12, and the bulls are attempting a 15-minute higher low now. So in the end, it went well, but it would have been twice the size, twice the winner if I had just tweaked that a little bit. And that is an example of me adding to a winner. And I have not been adding to a winner often. And that is a goal that I have for 2021 to do more and better. And this was an example where I was very close to doubling my position and having a really nice trade. In the end, it was just a nice trade. So hit the target, out that trade, and now the question is, can the bulls change the 15-minute time frame, change the 15-minute trend by getting back over 26.44 to give the bulls confidence that we can potentially maintain daily EMA 12 and the daily higher low, staying within this equilibrium for at least another few days. So that was one trade. From there, I went right to CGC, and this was a shout out to Yannick in the chat room because he posted a question for me asking about whether there was a play on CGC. And I look at this and I say, well, that's a 5-minute cup and handle. We've got the high of the day, a V-shaped bounce from the low of the day. We reject from the high of the day by 5 pennies. We bull flag, and then we break out on volume. So I recognize that cup and handle. And as soon as this move starts here, I make my entry before resistance breaks because I have my clear support of 25.37 that I'm playing off of. Because once this starts going up towards resistance, if we then drop down, reject from resistance and break support, it is not a cup and handle, and I don't want to be in that position. So I made an entry in the 25.50s, and we broke out, and we got really nice follow through. And I exited a bit early. I exited on this initial move here, and the reason being I was in too many trades and started feeling overwhelming. I still have my LAZR position from the past 2 days. That trade is shaping up nicely. Yet to break resistance, but bulls are right there, and we see some increased call activity. Let's just look at that real quick. So I'm still in LAZR. We keep setting these hourly lower highs. 30.75, 30.50, the high of yesterday, 30.18, the high of the afternoon, and then 30.34, unable to break the high of yesterday, giving us this rejection. But look at this volatility. I mean, from the low of the day to the high of the day, we've got great double-digit percentage ranges in both directions. So I am still in a swing position. It's looking like a daily inside bar could shape up. We'll see if the bulls are able to make a push into the end of the day. So I've got that position open. What was one more? Tesla. So Tesla, 15-minute RSI oversold. So I know that's the premise of the trade. Okay. I watched the low of the day. That low of the day was 625.55. Weak bounce, 5-minute lower high, and a new low of the day. I bought the new low of the day. Why? Because 5-minute RSI was back to oversold, but more importantly, the 15-minute RSI at that point was down approaching the teens. Tesla does not stay in 15-minute RSI in the teens in its current market environment very long at all. So you don't usually buy a break of support, but in this current market environment in 2020, we pointed out many times, that's why there's so many rising wedges and falling wedges, because we break support right before bounces and we break resistance right before pullbacks. So I entered as soon as 625 broke. My market fill was at about 625, and we then saw a solid bounce. So I exited at the 2-minute EMA resistance because, again, I was in too many trades and a bit overwhelmed. And at that point, a second trade set up. We zoom out to the 5-minute. It's an inverse head and shoulders. 5-minute, this is the left shoulder. This is the head where I made my entry. We failed to break 5-minute resistance, so there's the right neckline, here's the right shoulder, and the play then is to make a 5-minute higher low entry off of 623.80 and then look for a bull break. A less experienced trader is going to look at this 5-minute inverse head and shoulders breaking bullish and say, why did we not get any follow through? A more experienced trader is going to say, well, even on that 5-minute bull break, we know to just zoom out and scout a 15-minute lower high. 15-minute lower high versus the high of the day is the most likely scenario. So even though that short-term pattern is breaking bullish, the longer-term pattern still has us looking for that 15-minute lower high. So there's a little bit of a double top here at 634.50 and 633.92. We haven't set that 15-minute lower high yet, but we know that we're watching for it over the next hour or so. So those were the trade setups. And it's been a good day. So LAZR is now a falling knife. And this is one where, man, it is... For me, I didn't take a loss because I sold into strength this morning while live streaming at 29, and that really saved from a losing trade. But it is a mental loss, absolutely. So much effort into a non-event trade. Probably more effort than I've ever put into a trade that ended up essentially break even. I don't even know if it was a small win or a small loss or what. I don't even care enough to look. But just exhausting amount of volatility into a bear break. So essentially what took place, the setup, I don't have any regrets for it. I really like the setup, a nice hourly tightening range. Hourly resistance was very clear. We clearly saw accumulation going on around $27 yesterday. And the bulls looked fine today. They looked pretty good into the morning. And even here on this 15-minute rejection from resistance and pullback, we looked just fine. Where things started to change, you can pinpoint it on the 2-minute time frame. And it is a resistance break. We were ping-ponging between this range, 28.70s, 29.55. This is maybe an hour of trading, just sideways. And we finally broke it bullish. Look at the amount of bull volume behind that break. And then look at the amount of bear volume. So it's a bull break with zero follow through straight into a bear break of short-term support. That's always a red flag. So a little bit of a red flag, but you could rule that out and just say, okay, failed to break resistance. We've rejected from hourly resistance multiple times, and we're just going to look for an hourly higher low compared to the low of the day. And that's where my mind was and what my thinking was at that point in time. Then things started getting a little bit unusual. During this trading right here, there's notable volume here. And if you were watching the bid and the ask like I was, it was just relentless selling into the bids. You could see, in my interpretation of it was, someone is trying to smash this price down intentionally. They are not doing anything for selling on the ask. You know, if you're trying to get the most bang for your buck on selling shares, you sell at the ask and you don't put downward pressure on the stock. What was going on here was significant shares being sold into the bid and just smashing the bid and driving the price down. So my interpretation was someone's doing that intentionally. And in hindsight, obviously, once the news came out, this is inside information acting. Someone with a lot of money and a lot of shares knew that this bad news was coming, and they had about a half an hour plus to act on it. And I have no doubt in my mind that's what happened. 99% sure. So then the news comes out, and we obviously dump right through support. I stopped out. As soon as that low of yesterday breaks, we are in free fall. There is no support to be going off of. The trade is ruined. The hourly equilibrium and tightening range breaks bearish. The bulls did not prove anything to us. They had the setup there. They were close to proving something to us, but every attempt was an hourly lower high. I guess we broke one resistance level by a couple pennies, but we failed the high of yesterday. And then as soon as 25.85 breaks, game over. Failed trade for the bulls. Bears win. So now we're in a scenario where, yeah, we're still looking for a daily high or low, and it's going to be found, and we're going to bounce eventually, and it's going to be a 20 to 40% bounce. But I have no interest whatsoever in LAZR anymore at this point. And the reason being, I'm sick of it. That's really what it is. And that mindset has helped me many times. NIO, that trade today where I top fished it and stopped out first thing this morning for a small loss, it was my ability to just move on and completely not care about NIO anymore at that point that allowed for me to make some nice trades in CGC and in Tesla and in PLTR. So as far as I'm concerned personally, LAZR does not exist anymore, and I have no interest in trading it. The setup was there. the setup failed. So lick my wounds. Fortunately, they are mental wounds and not monetary wounds. And on to the next one.